In recent months, Russia has seen the value of the commodity on which it relies, crude oil, collapse, and along with it, the ruble. The central bank's answer? A surprise monster interest rate hike to 17% from 10.5%. Deniese Imoukhuede, an associate director of analytics in AM Best's London office, said those economic issues continue to hamper insurers. And sanctions out of Russia's ongoing conflict with the Ukraine have also begun to have an effect.
AM Best's view on Russia's insurance industry is negative. There are two reasons for that. From the insurance sector point of view, it's been on a softened decline for quite a while. We have mispricing and underwriting discipline, which is weak, being really the characteristics of these markets. From an economic point of view, Russia is dependent on commodity prices to support its economic prospects. When you have an industry that's really largely dependent on ensuring infrastructure projects, for example, which is quite important for Russia's economic growth, obviously the decline in the Russian economy is going to support a decline in the industry as well. Russia's market is highly reliant on international support. The economy is dependent on infrastructural projects. That requires insurers to have quite significant capacity to insure those. So they are reliant on international markets to provide those reinsurance capacity to allow them to underwrite those risks. At present, we have the issue of sanctions and its impact on Russia. So potentially with any further strengthening of those sanctions, we might start to see a removal of capacity from the international markets to support Russia's insurance. What I see in terms of the movement going forward, or the strategies of Russian insurers underwriting going forward, will be to look into Asian markets where you have good credit profiles in terms of the reinsurance capacity available. A negative potentially is if they start to rely on domestic reinsurers, because obviously these have weaker capitalization in terms of supporting their balance sheets. So potentially they could take on more counter risk exposure. But really fundamentally, when we look over the longer term, if the Russian market goes out into Asian, Latin America, or even African markets, what they will lack is the underwriting capabilities and the value-added services that international reinsurers provide to the Russian market.
We'd like to thank AM Best for their contribution to our program. If you'd like to see more of the First Monday series, visit the AM Best website.